What's up, family? It's your boy, Gems I Never Had, where I give you the gems I never had so you can make the decisions I couldn't. Today's episode is sponsored by Burt Bees. Go get you some. It's actually not sponsored by Burt Bees, but I'm speaking it into existence. Remember to like, comment, share, and subscribe when you get these gems. Today's video is called What Actually is the Stock Market? I'm finna break it down and make it simple. So, for an example, think of like a really big mall, right? And in this mall are different companies. So Tesla, Apple, Coca-Cola, AT&T, Sprint, right? So if you're walking through this mall, you can get a portion of each of these companies. When you buy a portion of each of these companies, that's called a share, right? So a share is like a tiny portion of a company. It's a tiny portion of a company, right? So for example, if my whole entire body is the company, a share might be like the little nub of mine, like the tip of my fingernail, right? Okay. So when you buy a portion or a share of the company, you are now what's called a shareholder. Being a shareholder is great because now you own a portion of the actual business, right? And also, you now have the right to vote on different company matters. Like usually companies have an annual meeting. You now have that right because you own a stock in the company. So a stock is equivalent to a share in the business. Same thing. So if you own a stock, you own shares of that company. Make sense? So to get into this mall or stock market, you need a VIP pass, right? So the VIP pass is the brokerage firm that you use. What is a brokerage firm? I got you. So a brokerage firm operates as the middleman so that you, like we as people, can buy stocks. So your VIP pass or brokerage firm can be Robinhood, Fidelity, TD Ameritrade, Charles Schwab. There's a whole bunch of different brokerage firms. Major gem, I like to use TD Ameritrade. Why? Because they have 24/7 customer service. When it comes to me, I like to be able to pick up the phone and call somebody. I don't want to have to send an email like Robinhood does emails. I don't like that. If you're going to have my money and manage it, I want to be able to call somebody and say, hey, what's going on? I got a question. TD Ameritrade is what I love. So when you buy a stock, right, using your brokerage or using the app or something like that, it's going to go into what's called your portfolio. Now, using this example of walking through the mall, right? So you got a little portion of Apple, a little portion of Coca-Cola, a little portion of AT&T, a little portion of Disney, right? It goes into your shopping bag if you were to walk through the mall. Your shopping bag is the same thing as your portfolio. So your portfolio just holds the pieces of stock that you have, just holds the stock that you have. So now, when you open up your brokerage firm, your VIP pass, your brokerage firm, let's say you're using Robinhood or TD Ameritrade, you open it up. When you go on the app or the website, you're going to see what's called positions. Positions, very simply, I'm gonna actually look at what I wrote down because y'all know I'll be looking at my notes. All right, so positions are simply the amount of stock you own. Break it down real simple. So let's say you're walking through that mall, you got 10 shares of Apple, 10 shares of Tesla, right? Now, when you look at your positions, it's going to say Apple, your position is going to say 10 because you have 10 shares. If you had 10 shares in Apple or Coca-Cola, whatever it is that you got, it's going to say position, 10 shares of Coca-Cola, 10 shares of Apple, 10 shares of Tesla. So each company is listed with an abbreviated, as an abbreviation, right? So these are called ticker symbols. For example, each company has one. It's like a company nickname. For example, Apple is AAPL. Coca-Cola is KO. Tesla is TSLA. These are the ticker symbols. So when you're going to buy a share of a stock, you're going to type this into your brokerage firm, your VIP pass. You're going to type it into your Robinhood, your TD Ameritrade, and you're going to see it's going to lead you to the stock. The stock market is open from 9:30 a.m. to 4 p.m. Eastern Standard Time. So that's New York time. If you're not from New York, right? You'll figure it out. You should live in Beaver. So the most important point that I want you to take away from this, the stock market is for building wealth over time, not overnight. The stock market is for building wealth over time and not overnight. You don't want to jump into this just trying to make a bunch of money overnight. I can't teach you how to become a billionaire overnight. And if you know that, please teach me, because that's not how it works. You want to build things slow and steady, right? Why do you want to invest? Well, the whole reason you want to invest is simply because you want your money to work for you. The whole thing of investing is you want to put in a certain amount of money, and at a later date, you want to have significantly more money into it, right? So the beauty of investing is when you're investing, think of your money as like a business partner that always works and never gets tired, but you do. The thing is, as people, we work like when you have a regular job, you work for wages. You have to trade your time for money. But when you're in the stock market, your money is working all the time. You get what I'm saying? You're not trading your time for money. You're just trading your money for more money. And the best part about investing is you basically just hire CEOs that you trust to do the work for you, and you just sit back and collect the money. It's the best thing in the world. The beauty about the stock market is that it averages about 7 to 10% a year. The bank doesn't even give you one. So for example, let's say you put $10,000 in the bank, right? In a year, given the interest, let's just say they gave you 0.01%. You'd get maybe $100. If you put $10,000 in the stock market, after a year, after averaging, let's just say 10%, you have $1,000. I definitely would want $1,000 versus that 100. You know what I'm saying? So the interest is another thing that it's fundamentally different. As these companies grow over time, which is the nature of any company, they're going to want to grow over time. The money that you put in, as their stock price increases, so does the amount of money that you put in. So if you put in $10 and now the company's at $100, you're at $100, you're up $90. Now, of course, when the stock price decreases, the money in your stock account will decrease. But the gem about it is you never lose money until you sell out. Now I'm gonna break it down. For example, if you bought a house at $500,000, and then somebody comes and says, "Oh well, you could have got that house for $480,000." You didn't lose $20,000. Why? Because you still have the house that you bought. So you still hold the value of $500,000. Now, if you sell it for $480,000, then you've lost $20,000. But when you hold it and you sit on the equity and you let it work for you, now you're not only going to get the $500,000, but you're probably going to get more, because over time, the stock market and over time, your assets increase. Quick example is if you look at, like, let's say Denzel Washington's movie career or something like that. He has movies that are great, movies that are low, movies that are great, movies that are low. But over time, you don't look at the movies that weren't as great. It just looks like his career goes like this. You know what I'm saying? So if y'all like this content, comment below the stock emoji, the little scales, or the chart. Let me know what y'all want. Let me know if y'all have any more questions. Feel free to DM me and I will get back to you. All right, y'all, those are the gems. If you got anything from this video, remember to like, comment, share, and subscribe. Follow me on Instagram at Akil Davis. I'm going to have it in the description below. That's Akil Davis. All right, fam.